Let me get Jayesh Mehta in. He's Country Treasurer at Bank of America Merrill Lynch, joining me from Mumbai. Good morning, Mr. Mehta. Thanks for coming in. So what's your understanding of the news that's been coming out? So they seem to be hiking it by $10 billion cumulatively, but $5 billion of that is saved for long-term investors, so sovereign funds, pension funds, etc.
Yeah, I think that's what they basically want to tap long-term money, and one of the things they have prescribed is half of it will be reserved mainly for long-term investors like pension and sovereign funds. The challenge, I think, is to see the detailed guideline, operational guideline for this, because the challenge would be a lot of them may not be coming directly, or they might be coming through their, investment arm. So how do we, actually make them eligible for this $5 billion. The other $5 billion is definitely welcome, which is generic for everybody.
In the $5 billion that has been reserved for these long-term investors, they're saying no residual maturity, no lock-in period. Does that help, sir?
Yeah, I think, you see, that basically it depends on the investor type, right? So anyway, if you're targeting pension and sovereign fund, they are typically anyway long-term investors. So in all probability, 90% of them would be long-term money. Of course, there is some delta hedging or something which they want to really do, or correct that, rebalance their portfolio. That's the only time they would sell. But they are typically long-term investors, which is what our end objective for the country is, to get long-term money. So the only challenge would be, it's a good move, but the only challenge is to how to distinguish, because a lot of them may not come directly, right? So they may actually come through a fund, or they may come through their investment arm. So how we actually make sure that it's pension and a sovereign fund do get the benefit of it.
Got that. So the rest of the limit just gets added up to the general kitty. I'm just wondering, what has been the demand picture from FIIs right now? Is a lot of money going into the short end, or is there money starting to come in on the long end as well?
I think as of right now still is short end. Till I think the biggest showstopper, we firmly believe, for long-term money is the withholding tax. So unless something is done about withholding tax across the board, not only for infra, but say GSEC, corporate bond, and infra, for us to attract long-term money is little difficult, because sovereigns anyway don't pay withholding tax. But for the other long-term players, till the withholding tax is rationalized to 5%, it's little difficult to get long-term money.
Okay. So in terms of sort of the impact of this, I mean, I'm not sure if this will have an impact on the bond markets itself, currency. I mean, once the notification comes out, any sort of potential positive for the currency then on this?
Not really. I think currency is really tracking the FI equity flows, and at least the currency market believes that at least December, January would be a robust flow. So at least for the time being, we see 55 being capped right now. I don't think it's really breaching it, at least for next couple of months. We expect equity to have robust flow continuing for the whole of this month and next month.
So you see potential for upside then on the rupee, unless of course something disruptive happens in Delhi. Until the week before last, I think there was quite a bit of fear that we won't get our act together in Delhi, and that's why the rupee wasn't responding to euro strength or to FII flows.
No, that's true. I think unless there is some negative surprise, I think people are going with the presumption that 70%, 80% things are on track, and nothing dramatic happens, negative happens in Delhi.
So just a quick word also on how you're looking at the bond markets and yields right now. That OMO announcement did a bit to bring down yields. Do you see further potential for yields coming down, or does it depend now on the RBI's mid-quarter to see if they take any action on the repo rates, sir?
No, I think we were stuck in the range of 10-year at 812, 822 with the OMO coming in, and we expect one more OMO to come in because liquidity is really short. And I think with that, we would say that range would be 808, 818 for the time being. And then maybe end December, early January, people will start building up expectation on the January rate cut. So definitely, I think 816, what today is on the higher end of the range. We expect it to be much lower, maybe 3-4 basis points lower in next few days.
All right, so we watch out for that. Thanks so much, Mr. Mehta. Appreciate you joining us, giving us a sense of that FI debt limit hike, but also broadly what's happening on the bond markets and the currency market.
Do you have the NDTV Profit app? All the markets, all the news, and your own homemade, ready-made portfolio available there for you.
we will right now answer what you should sell, what you should buy when markets are down.
Download at NDTVProfit.com/apps. Get the best app from the channel you trust.